In this video, you will get a complete breakdown of Warren Buffett's current US stock portfolio. I will reveal exactly what the Oracle of Omaha has been buying and selling in Q1 2025, including two major companies he completely exited that might surprise you. But this isn't just about numbers. I want to decode Buffett's investment philosophy by analyzing 20 years of his actual moves, so you can understand how one of the greatest investors of all time actually thinks and applies his strategies in real market conditions. If we don't understand how Buffett actually invests, not just what he says in interviews, but what he actually does with billions of dollars, we are missing out on learning from the master himself. The problem is that most people only hear Buffett's sound bites and quotes, but they never see the full picture of his actual investment decisions. The 13F filings show us exactly what Berkshire Hathaway owns, but they are just raw data. They don't tell the story of why he made those decisions or how these decisions fit into his overall strategy. It's like having all the puzzle pieces scattered on the table without knowing how they fit together. So today I will walk you through every single position in Buffett's current portfolio. I will take you back in time to show you exactly how he built each of these positions, when he started buying, how he sized his bets, and what was happening in the market when he made these moves. Finally, I'll connect the dots to show you the patterns and principles behind his decisions, so you can start thinking like Buffett and apply these insights to your own investing journey. Now, before we start, we have to understand that this is only Berkshire's US stock portfolio. We know Buffett made huge investments outside the US, for example in Japan. But also, Berkshire owns over 70 companies that are not publicly traded. Just to mention Berkshire Hathaway Energy, Northern Power Grid, See's Candies, Dairy Queen, Fruit of the Loom, Duracell, Burlington Northern, Santa Fe Railway, and GEICO. So this portfolio is only a part of a giant painting that is Berkshire Hathaway. It is also important to mention that Warren Buffett is not the only one making investment decisions at Berkshire. The other two key investors are Ted Weschler, who joined Berkshire in 2011, and Todd Combs, who joined Berkshire in 2010. And they manage around $10 billion each, so most probably they handle the smaller positions, while Buffett focuses on the mega positions. So let's go to Smart Money Portfolios and choose Warren Buffett. And this is the entire portfolio of Berkshire. We can see it is valued at $258 billion. Last quarter, they received over $1 billion in dividends. The value of the portfolio went down by over $8.4 billion. And they were buying just a little bit more than they were selling in the last quarter. And the portfolio consists of 36 stocks. So this is going to be a very long video. And before we take a look at the current portfolio, let's concentrate on two companies that Warren got rid of in Q1 2025. New Holdings, and this is a Brazilian fintech company that operates New Bank, one of the largest digital banks in Latin America. And as we can see, he sold all of the shares and they were valued at around $416 million. Now, he bought his first shares in Q4 2021 for around $9, and we can see the price went down significantly to $3.70 in Q2 2022, but he just held all the shares. The price went up to over $12, over $13, and then he started to sell. So we can see that this investment didn't go as planned, but even when the price was down, he didn't sell. So they kept the shares until they were profitable, which is in line with Warren Buffett saying, first rule of investing, never lose money. Okay, so the second stock he completely sold was Citigroup, and this is one of the largest multinational investment banks and financial services corporations in the world. So we can see that it was worth around $1 billion when he sold it, and during time he owned it, so from Q1 2022, he received very nice dividends. We see Q3 2024, the dividends were almost $31 million. So the shares were bought at around $53 in Q1 2022. Price basically didn't do anything special, and after around 2 years it went up a bit to something closer to $62, or even a bit higher next quarter, closer to $70, and then they decided to sell Citigroup. So again, this investment didn't do much, but when the price went down a bit after they bought the shares, they didn't sell, they kept it not to lose money. Okay, and now we get to the smallest position in the portfolio because Citigroup is no longer there. So the smallest position is Liberty LILAK Group. So this is a stock that represents Liberty Media's Latin American telecommunication investments. And we can see that it is a really small investment for Berkshire. It is worth less than $8 million. It is less than 0.01% of the portfolio. The stock went down last quarter by $166,000, and they hold this position. There were no changes to the amount of shares. We can see that they bought their first shares in Q3 2015 for around $34. The price went up, they held it, then the price went down again to $32, and they really made it a much bigger investment. And since then, they were basically holding the shares. We can see just a quick movement here in Q3 2020 when the price fell down. They bought some extra shares. Next quarter, the price went up. They sold those extra shares, so they made a small, quick profit. But apart from that, the amount of shares is not changing, but they are losing money on this investment. The price right now, or at the end of Q1 2025, was around $6. So this investment is not working very well for Berkshire and for Buffett. Okay, next we have Atlanta Braves holding Series C, and this stock represents ownership in Atlanta Braves Major League Baseball team. So it is worth $8.9 million. The stock went up by $391,000, and we can see they bought those shares in Q3 2023, and the price stays basically flat throughout this investment. So nothing really interesting happening here. Also, we don't see any dividends. Okay, let's see the next one. And this is Liberty LILAK Group A shares. So this stock is also representing Liberty Media's Latin American investments, but it has different voting rights. Okay, so we can see that this investment makes up 0.01% of the portfolio, and that's worth over $16.5 million. It went down, but just by $79,000, and they didn't make any changes to this position. And we can see this is basically the same story as with C shares. So exactly, they bought those stocks in the same time and they made basically the same movements with it. We can see they sold just a little bit in Q4 2019, but that is a very small movement. And as with the other investment in Series C, this is not really going very well for Berkshire. Okay, next we have Lennar Corporation, one of the largest home builders in the United States. So this also makes up 0.01% of the portfolio, over $16.5 million, but they received some dividends, $76,000, but the value of the stock went down substantially in the last quarter by $3.5 million. So we can see it that they bought it in Q2 2023 for around $110. The price went nicely up till Q3 2024, and for the last 2 quarters it is going down really substantially. Right now it seems that they are also losing money on this investment, but they get dividends. Every quarter we see some dividends, nothing very special, but this is also a very small investment for Berkshire. Next, we have Jefferies Financial Group. It is a diversified financial services company providing investment banking, asset management, and other banking services. So this investment is worth over $23 million. They received a really nice dividends of $173,000, but the value of the stock went down by over $10 million, and they didn't make any changes to this position. And we can see this is a very interesting story because they bought it in Q3 2022 for something close to probably $35, and the stock was going up very nicely till Q4 2024, when the price went all the way up to $78. And then last quarter in Q1 2025, it went down to $53. So I don't know what was the problem with the company, but we can definitely see that something happened here because the sentiment on this stock definitely changed because the price went down so dramatically. And we can see that they are getting nice dividends every quarter from this investment. And then we have another investment, and that is Diageo, a British multinational alcoholic beverages company that owns premium spirit brands like Johnnie Walker, Smirnoff, Baileys, and Guinness. So this investment was made in Q1 2023 for a price of around $181. And since then, they didn't make any meaningful changes to the number of shares, but the price went down substantially to $104. And even the last quarter, we can see the value of this investment went down by $5 million. And right now it is worth around $23.8 million. And every other quarter, they receive some nice dividends. So let's keep on moving. And now we have NVR, and that is a home building company. So it makes up 0.03% of the portfolio. It is valued at $80.5 million. There were no dividends last quarter. The value change last quarter was minus $10 million. So a substantial change here as well. And they didn't make any changes to this position last quarter. So this is also an investment from Q2 2023. They paid around $6,350 per share, and currently it seems that the stock is a bit up. In the end of Q1 2025, it was closer to $7,000, and there are no dividends here. So no meaningful change over the last 2 years, but it is a profitable investment for Berkshire. Next, we have HEICO Corporation, an aerospace and defense company that manufactures flight support products, electronic equipment, and parts for commercial and military aircraft. So this position makes up 0.09% of the portfolio. It is valued at $245 million. There were no dividends last quarter, and this investment went up by almost $50 million. But not only because the price went up, but also because they bought extra 10.7% of shares. So they are making this investment bigger. And we can see they bought the shares in Q2 2024 for around $177. And right now the price is, or at the end of Q1 2025, the price exceeded $200, and they are making this investment even bigger. So this seems like a bet on the military, which is unfortunately probably quite reasonable. And we can see that they got some dividends in Q3 2024. Then the next position is Liberty Media Corporation Formula One Series C shares, a stock that represents Liberty Media's ownership of Formula One Group, my favorite sport, so I'm very happy that Berkshire owns those shares. But as you can see, they are actually selling this investment. So it makes up 0.12% of the portfolio, valued at $316 million. And the value went down by almost half of it because they sold last quarter 48.4% of this investment. So we can see they bought their first shares in Q4 2021 for around $63. Then the price went up just a bit and they made it even bigger at around $69. They made this investment quite meaningful. And we see the price fluctuates up and down over the years. They're not making any changes. And in Q4, when the price hit $92, they started to sell, and last quarter the price was still at around $90. They sold almost 50% of this investment. There are no dividends from Formula One rights at the moment. Okay, and next we also have Liberty Media stock, but this is Liberty Media Corporation Series A Live, and this stock represents Liberty Media's stake in live entertainment assets. So it makes up 0.13% of the portfolio. It is valued at $335 million. No dividends last quarter. The value went up by $3.3 million, and there was no change in the number of shares of this company. So we can see they bought the first shares in Q3 2023 for around $31. And since then, the price is basically going up all the time. They are holding the shares. Right now, they are over $67, or at least they were at the end of Q1 2025. And they are holding this company. There were no dividends throughout this investment. Next, we have Pool Corporation, and that is the world's largest distributor of swimming pool supplies, equipment, and related leisure products. So it makes up 0.18% of the portfolio, valued at $466 million. They received a really nice dividend of $1.7 million last quarter, and the value of this investment went up by 261 or almost $262 million. And the reason for that is not that the price went up, because it actually went down, but that they invested another 144% to this investment. So this is a fairly new idea for Berkshire. They bought the first shares in Q3 2024, and they added to this position every quarter since then. The price is going slowly down from just under $400 to around $318 at the end of Q1 2025. And we can see that they are receiving some nice dividends from this investment. Okay, next up we have Louisiana-Pacific Corporation, a building solution company that manufactures wood building products. So we see that this makes up 0.20% of the portfolio, valued at $521 million. They received dividends of $1.5 million, and the value went down by $65.5 million last quarter, and there were no changes to this position. So we can see this investment started in Q3 2022. They bought those shares for around $51, and next quarter they added even more, even though the price went up to $59, and they were holding this till around Q1 2024, when the price was at $83. They started to sell a little bit. Now, in the last 3 quarters, we see the price is even over $100 in some periods. They are slowly trimming this position, making some really nice money on this investment. And also during all that time, they are receiving some nice dividends every quarter. Okay, then we have Charter Communications, one of the largest broadband communications companies in the United States, providing cable television, internet, and phone services. So we can see that this investment makes up 0.28% of the portfolio. It is valued currently at $731 million, no dividends, and the value of this investment went up by over $48 million, even though they sold 0.4% of shares. So this is a much older investment. We can see they bought the first shares in Q2 2014 for $158. And when the price was basically the same, going up and down a bit, they were adding to this position till Q1 2016. And since that moment, they are trimming this position, well, not every quarter, but every now and again, especially when the price is really, really high, like it was here, over $721 in Q2 2021. So we can see that this is absolutely great investment. Recently, the price is a bit down. In the last year, it is going up nicely, but before that, there were like 2-3 years of actually the stock going down. But during that period that the stock was going down, Buffett didn't sell a single share. He waited for a moment that it starts to climb up again. So we'll see how will that end. Even if they would sell the shares right now, they would make a beautiful profit on this investment, even though there were no dividends during this entire period. And now we get to the last investment in the Liberty Media family. This is Liberty Media Corporation Series C live shares. So this stock also represents Liberty Media's stake in live entertainment, but it has different voting rights. So as we can see, this position makes up 0.29% of the portfolio. It is worth $743 million. No dividends. The stock went up a bit. This investment's value went up by $873,000. No change to the number of shares in the last quarter. And they bought their first shares in Q3 2023 for around $32. Since then, the price went up. We can see there were no meaningful changes or no changes at all. Yeah, no meaningful changes. We can see some small changes of the number of shares. But throughout those 2 years, and right now, the stock is worth $68. So this seems like a very nice investment in less than 2 years. And of course, no dividends. Now, let's take a look at all 5 Liberty Media investments, because we can do it in our smart money portfolios. Let's just choose the companies we want here. So 1, 2, 3, 4, and 5. So there are 5 Liberty Media investments made by Berkshire, and they make up 0.55% of the portfolio. They are worth $1.4 billion. There are no dividends, and the value of this investment went down by $310 million last quarter. And the reason for that was selling the Formula One part of the company, or trimming it by 48%. So for the entire Liberty Media investment, it is minus 9.7%. So, and here is the history of the entire investment in all the different parts of this company. Okay, so now let's go to the next position, and it is T-Mobile US, one of the 3 major wireless network operators in the United States. So it makes up 0.4% of the portfolio, valued at over $1 billion. Last quarter, they received $3.4 million in dividends, and the value of this investment went up by over $75 million, even though they sold 10.7% of it. So as we can see here, the price really went up drastically in the last quarter, and they decided to sell. But let's go back in time. So we see they bought those shares in Q3 2020, so just after the COVID crash, and they paid around $114. And then the next quarter, the price went up just slightly to $134, and they really made this investment a significant one. And now that the price is going up, we can see they are trimming it almost every quarter. They started to do it when the price hit around $176. And at the end of Q1 2025, the price was at $266. So a really nice investment. And also we can see that since Q4 2023, they are receiving some nice dividends. Okay, let's get to the next position, and that's LI Financial, and it is a financial services company that provides automate financing, online banking, home loans, and other products primarily through digital channels. So we can see that it makes up 0.41% of the portfolio, $1.057 billion. That's the investment value currently. They received really nice dividends of $8.7 million. and the value change last quarter was $13.3 million, and they didn't make any changes to this position. So we can see that they bought their first shares in Q1 2022 when the price was around $43. Then next quarter it went down to $33, and they really made this investment much, much bigger. And since then the price is basically staying the same, at least no significant changes. Right now, or at the end of Q1 2025, it was worth $36. So fantastic investment, but every quarter they are receiving really nice dividends of almost $9 million. So through dividends, this investment makes a lot of sense. Next, we have Dominos Pizza, an international pizza delivery company that operates worldwide. So this investment makes up 0.47% of the portfolio. It is valued at $1.2 billion, and last quarter they received $4.5 million as dividends. And the value of this investment went up by $204 million. And the reason for that is, on one side, that the price went up, but on the other, that they added extra 10% to this investment. And this is a fairly new investment from Q3 2024. They bought their first shares for $430 or thereabouts, and then they added every quarter. At the end of Q1 2025, the price was at around $459. So they are still adding to it. They are making it bigger every quarter, and thanks to it also the dividends are getting bigger every quarter. So it's going to be very interesting what will happen next with this investment. Okay, let's move on. And next up we have Capital One Financial, a diversified bank holding company. It makes up 0.5% of the portfolio, worth $1,281 million. They received $4.2 million as dividends last quarter, and the value of this investment went down last quarter by over $46 million. And the reason for that is not really associated with the price change, because we can see that it barely changed, or if anything, it went up a bit, but the fact that they sold 4% of this investment. So the first shares were bought in Q1 2023 for around $96. And we can see that the price was going up all the time. They added to it in Q2 2023, and when it was at around $148, they sold a significant portion of this investment. And actually since then, since Q1 2024, they are selling shares of this company every single quarter, and the price is going up. So the market is buying it and believes that there is more value in this investment. But Buffett and Berkshire Hathaway as a whole believes that it is the right time to sell. Also, we can see that throughout this investment, they received very nice dividends. So last quarter, $4.2 million. But when they had more shares, for example, in Q1 2024, they received almost $7.5 million through dividends. Okay, and the next position in this portfolio is Aon, a global services firm that provides risk management, insurance, and human resources consulting services to businesses worldwide. And this investment makes up 0.6% of the portfolio. It is valued at $1.6 billion. Last quarter, they received a rather small dividend for the size of the investment of $2.7 million, and the value went up by $163 million. And that's only because the price went up. We can see they didn't make any changes to the amount of shares. So they bought those first shares in Q1 2021 for around $250. We can see that the price went up all the way to $325. Then it dropped again, went up again. So the price is going up and down all the time, but the amount of shares is basically not changing. We can see a small sale transaction here in Q3 2023, but other than that, there are no changes. And at the end of Q1 2025, one share of this company is worth $399. So a very nice investment, especially when we consider the dividends, because every quarter they're receiving extra dividends. So it's not only the fact that the price is going up and they are holding the shares, but also they get nice dividends every quarter. Next up, we have a really big and famous company, Amazon, a multinational technology and e-commerce giant. And Amazon makes up 0.74% of Buffett's portfolio. It is valued at $1.9 billion. Of course, no dividends from Amazon. And last quarter, the value of this investment for Buffett went down by $291 million. We see that he didn't make any changes to this position. And actually, when we go back in time, we can see that he bought first shares of Amazon in Q1 2019 for around $89. And just a few quarters later, COVID happened and the price went up a lot. But we can see that he didn't sell then, he kept the company. The price went down again in Q4 2022 to around $84. Still no changes to the amount of shares. And then in Q3 2023, we can see that he sold around 551,000 shares. So nothing really meaningful, but a small reduction. Still, he was making money on this investment. Right now, the price is even higher. At the end of Q1 2025, we can see it is, or it was, really close to $200 per share. So very nice investment from Buffett. He said it many times that he was late to the party when it comes to Amazon. But finally, in Q1 2019, he made a move, and so far it looks really nice. Of course, there are no dividends from Amazon. The next company is also a huge company that we all know and use, and that's Mastercard, a global payment technology company. It makes up 0.84% of the portfolio, valued at just under $2.2 billion. We can see $3 million in dividends, and the value change last quarter was almost $86 million with no changes to the actual position. So this is a much, much older investment for Buffett. We can see that he bought his first shares in Q1 2011 for around $25. So that was around the European debt crisis, which influenced stock prices all over the world for quite a long period. And we can see that he added to this position, he doubled this position next quarter. The price steadily rose, but in Q3 2014 and later on in Q4 2004, 2014, he kept on adding to this position. Then for many years, there were basically no changes to the amount of shares he owned, and the price kept on going up, which is absolutely incredible. And then we see something really interesting. It looks like a mistake from Buffett. So we see that in Q1 2020, when there was a drop of stock prices due to COVID, he actually sold some shares. Maybe a bit later in Q2 2020, when the price started to recover. But it seems that there was a time that he could actually invest much more into this company because the price went down, but for some reasons he decided that such an investment is enough, or that he could actually trim this position. And that's what he did in two other occasions later on in 2021 and 2022. But other than that, he's still holding it. It is a meaningful position, not a huge one, but $2.2 billion, that's not peanuts, even for Buffett. And right now, or at the end of Q1 2025, the stock is at $548. And let's remember that he bought his first shares for $25. So an absolutely incredible investment. But because he is holding this company for such a long time, that is why this power of compounding works. And that's not all, because let's look at the dividends. The dividends are also growing all the time. We have some quarters when they're going a little bit down, but other than that, they are growing incredibly. His first dividends were worth $32,000, and the recent one was worth $3 million. So that is an impressive growth of the stock price and the dividends at the same time. Oh, and if you would like to get access to the website I am using to analyze portfolios of some of the best investors out there, then head over to our Patreon page, where you can find not only smart money portfolios, but also stock rankings and 4 different valuation calculators. Okay, let's get back to Warren Buffett. And now we get to Constellation Brands, which is the 15th biggest investment for Warren Buffett, and it is a leading international producer and marketer of beer, wine, and spirits. This investment makes up 0.85% of the portfolio, valued at $2.2 billion, and they received a very nice dividend of over $12 million last quarter, and the value change is really huge, $960 million. And the reason for that is that they bought a lot of shares. They actually increased this investment by 113.5%. So we can see it is a very new investment. The first shares were bought in Q4 2024 for around $221, and the price in Q1 2025 went down to $183, so Berkshire bought even more shares. And this is very interesting. We'll see what will happen with this investment, but so far the price is going down. They are buying a lot more shares, so this is a typical contrarian thinking, taking advantage of a fair price or even a bargain that you can get shares because the market believes it is worth less. And they are also getting some nice dividends through this investment. Okay, let's move on, and we get SiriusXM Holdings, a satellite radio company that provides music, sports, news, and entertainment to subscribers across North America. So this is the first position that makes up over 1% of the portfolio, valued at almost $2.7 billion. Last quarter, they received over $32 million in dividends, and the value of this investment went up by $21 million. And the reason for that is that they bought extra 2% of shares. So we can see this is the history of this investment. First, shares were bought for around $45 in Q3 2023, and then the price went down a lot in Q2 2024 to around $28, and they bought a lot of shares. And then they quickly sold them. Now they are buying it again. Actually, this looks really strange for Berkshire Hathaway. I don't think this is actually Buffett buying those stocks, because every quarter it's going in a different direction. So this is really not like Buffett, because usually he sees an opportunity, he believes in the company for a long term, and he just buys it, holds it, and if the price gets ridiculously high or very, very low, he may make some changes. But this is like a roller coaster every quarter. Also, we can see there are some very, very nice dividends along the way. Okay, let's move on. And we get another really huge company, and that is Visa, the world's largest payment processor that operates a global electronic payments network. And this company makes up 1.12% of the portfolio, valued at $2.9 billion. We can see that last quarter, Warren received $4.9 million in dividends, and the value of the stock went up by $285 million, and there were no changes to this investment. So he bought his first shares in Q3 2011 for around $21. So basically at the same time he bought Mastercard during the European debt crisis. And the price is basically showing the same story that we saw with Mastercard. It is going up all the time. And also here we can see that in the same period around COVID, he trimmed this position just like with Mastercard. So what was the thinking behind that? What were the reasons for selling a stock? We just don't know. Maybe he decided it's the right time to sell the stock to gather money to invest it in something else. We just don't know. But we can see a huge mistake at the beginning of this investment in 2012, because he really trimmed this position. He sold over 50% of it during those 2 quarters in 2012. If he just held on to the stock that he bought in Q1 2012, this investment would be much, much greater. It would probably make up right now over 2.5% of the portfolio. But even so, it still is a great investment. At the end of Q1 2025, the price was at around $350. So a great investment. And just as with Mastercard, we see that the dividends are going up all the time through the years. The first dividend was around $343,000, and currently it is closer to $5 million every quarter. Okay, let's see the next company in this portfolio, and it is Verisign, a global provider of domain name registry services and internet infrastructure. Basically, if you want to have a .com or .net at the end of your website, that goes through Verisign, and they are getting some of the money from that every time all over the world. So that's quite impressive. Okay, and this business makes up 1.3% of the portfolio. It is valued at $3.3 billion, no dividends, and last quarter, the value of this investment went up by $627 million. And they added to it 0.1%, so that's not what made this huge change, but we can see it was the price that just skyrocketed at the beginning of 2025. So this is actually a long-term investment for Buffett. So he bought those first shares in Q4 2012 for around $38, and through the next year, 2 years even, he was adding to it. The price basically stayed the same, and he bought a lot of shares, almost 13 million shares. And then over the years, the price steadily went up. We can see that around 2019, 2021, there is more fluctuation, like with everything because of COVID. And then we see a huge drop here near Q2 2022 and Q1 2022. But Buffett didn't sell any shares. And right now, the stock that he bought is worth $253 per share, or right now at the end of Q1 2025 at least. So this is another absolutely great investment from Warren Buffett. And again, long-term investment, not reacting to price fluctuations, just holding the company that he believes has a lot of value. And we don't see any dividends here. Okay, let's move to the next company in the portfolio, and that is Kroger, one of the largest supermarket chains in the United States. It makes up 1.31% of the portfolio, valued at almost $3.4 billion. They received $16 million in dividends last quarter, and the value of this investment went up by $327 million last quarter without any changes to the amount of shares. So we can see that Buffett bought the first shares of this company in Q4 2019 for around $28. And he slowly added to this position till Q2 2021. And when the price reached around $57 in Q1 2022, he trimmed this position a bit. The price went down again, and he just kept the shares. So we can see that, again, he is true in his actions to what he is actually teaching, that he is selling only when the price gets ridiculously high. And that is exactly what we can see here, that for 1 quarter, 2 quarters, it was much higher than before. He sold some shares, the price went back to basically the same levels it was before the spike, and he's just keeping the shares. Q1 2025, the stock is up. It is worth $67 per share. But he's holding this investment. He believes that the value of the stock is much higher than it was in Q1 2022, so it's worth to hold this investment. But there is also another reason, and these are dividends. Very meaningful dividends. I mean, $60 million every quarter. In 2024-23, it was for $14.5 million, before that $13 million. So it is slowly going up all the time. Good. And now we get to the top 10 companies. The 10th biggest investment for Berkshire Hathaway is DaVita Healthcare Partners, a leading provider of kidney dialysis services in the United States. So this investment makes up 2.08% of the portfolio, valued at $5.3 billion. No dividends last quarter, and the value of this investment went down by $22 million. But the reason for that is that Buffett sold 2.6% of this investment. The price actually went up very, very slightly. So this is another long-term investment. He bought his first shares in Q4 2011 for $37, and he was adding to this position for over 2 years. So the price was going up, not like in a very impressive way, but it was going up. In those 2 years, it went up to $68, but he was still adding to his position. So this shows his belief that when you find a good investment idea, you have to bet big. And that's what he did every quarter, adding to this investment. And then last buy transaction was somewhere around Q4 2014. Since then, almost no changes to the amount of shares. We can see that here in Q3 2020, when the price was around $85, he trimmed this position just a bit, and then last quarter he trimmed it very slightly by 2.6%, and the price at the end of Q1 2025 was $152. So another great investment by Buffett. Okay, so let's see other companies in the top 10 for Buffett. And ninth biggest investment in his US portfolio is Chubb Limited, one of the world's largest publicly traded property and casualty insurance companies. So we see that it makes up 3.16% of his portfolio. It is valued at $8.1 billion. And last quarter, he received $24 million as dividends. And also the value of this investment went up by almost $700 million. And there were no changes to the amount of shares. So the price really increased in a meaningful way. He bought his first shares in Q3 2023 for around $208, and he added to this position for the next 4 quarters. The price went up a bit during that time, but nothing really meaningful. And now for the last year or so, he is just holding shares of Chubb Limited. We will see what will happen. The price is going up, but nothing extraordinary, so it is probably a beginning of a long-term investment. Of course, we will see how the whole story will develop with this company. Also, some really nice dividends here, as with a lot of companies that Buffett owns. Okay, next we have Kraft Heinz Corporation, a major American food company formed by the merger of Kraft Foods and Heinz. This investment makes up 3.83% of the portfolio, and it is valued at $9.9 billion. Last quarter, they received quite impressive $130 million in dividends, but the value of this investment went down by $91 million. No changes to the amount of shares. Now here we can see that he bought his first shares in Q4 2012, but that was a really small investment that he sold completely, and then he made this really big investment in Q3 2015 when he paid around $70 per share. And this is probably one of the biggest mistakes by Buffett, at least mistakes of commission, not omission. Because at the beginning, for the first year, 2 years, it was looking really nicely. The price went up and everything was fine. But then we see that the price is falling down till around Q2 2019, and then it just stays down for the entire period. So really, really bad moment to buy this stock. But that's not the full story. We also get dividends. And we can see that there were really huge dividends till Q4 2018. You got $203 million through dividends. Actually, the price was going down, but he was receiving so much money through dividends that it all seemed like a very good investment. Then the dividends were cut in Q1 2019. They're still impressive, $130 million every quarter, but they're not as huge and they are not growing. So this is not the best investment by Buffett, but the dividends actually make it work. Okay, let's move on to even bigger positions in his portfolio. And the seventh biggest investment in this portfolio is Moody's Corporation, a global integrated risk assessment firm that provides credit ratings. So this is a very old investment. We see that he owned those shares of Moody's in Q4 2006. We don't actually have information when exactly and at what price he bought Moody's, but we know that he owned shares of it in Q4 2006. Now, what is important to notice is that here we have 2008, 2009. So the financial crisis. Maybe he changed his mind because the price was down and he decided that he made a mistake, or that it will take such a long time for the price to come back to the price that he bought it, that he can find better opportunities, or that he actually needed money for some other investment. So we don't know the reasons, but we know that he sold a lot of shares in Q3 2009 and Q4 2009. Then he kept the shares. We see another sale transaction in 2013. So what is interesting is that the stock didn't do that well. I mean, it went up and he made probably some money on it, but it wasn't anything special until around 2017, when we can see that it started to go up drastically. Then we have another drop of the share price in 22, but since then, since Q3 2022, the price is going up very nicely. So it is a great investment for Buffett, but you could argue that he was too early. And as we know, being too early is indistinguishable from being wrong. So he probably heard a lot of bad words about him since 2006 all the way, let's say, to 2013, because the price just didn't go anywhere. And you can argue that there were some missed opportunities because he had so much money invested in Moody's. But after that, after 2017 at least, it is going up really, really nicely. So again, long-term investing, holding companies for years, for decades, made this investment work. He didn't sell, even though for many, many years it just looked so-so, or actually quite bad. Okay, next we have Occidental Petroleum. So this is an American petroleum, natural gas, and petrochemical company, and it makes up 5.06% of this portfolio valued at over $13 billion. Last quarter, they received $63.5 million through dividends, and the value of this investment went up by $24 million. They actually added to it 0.3%. And this is a fairly new investment, at least for the scale and time frame of Buffett and of Berkshire. We see that he bought the first shares of Occidental Petroleum in Q1 2022 for around $56, and he's basically adding to this position every quarter since then. So it is over 3 years, and he's just adding and adding to this position. Currently, at the end of Q1 2025, the price is around $49. So not a huge change from what the price was when he bought his first shares, but it is going down a bit. And so far, it seems like not the best investment, but as we saw before, for example, with Moody's, these are long-term bets. He's still adding to it. He's still buying more. So he believes that if we look at this company in decades and not just years or quarters, it will create a lot of value. Also, we get huge dividends every quarter. So far at least, it is a dividend investment for Buffett. We can see 63 million, quarter earlier 58 million, 56 million, again 56 million. So a lot of money coming back through dividends. And maybe the price will go up, maybe not. But even if not, by having a company with a lot of dividends, it is making such an investment more secure. Okay, let's move on. And here we have Chevron Corporation. And this is one of the largest energy companies in the world. It makes up 7.67% of Warren Buffett's portfolio, valued at $19.8 billion. Last quarter, he received $202 million through dividends, and the value of this investment went up by $2.6 billion. That's incredible because they didn't buy any extra shares. So this investment started in Q3 2020 when he bought his first shares for around $70 probably. Yes, $72. That was the price at the end of Q3 2020. And we see that then he added a bit, trimmed this position, and then when the price was much higher in Q1 2022, when it was around $162, he really made this investment a huge one. And even though he bought it at such an elevated price, at least compared to what it was worth around a year or a year and a half earlier, he still made this investment work. Right now, the price is a bit up from what he paid for it, $167. But it's not only about the price. Also here, we have huge dividends. So last quarter, it was $202 million, but there were quarters, for example, Q3 2022, $234 million, then $231. So huge amounts of money coming back to Warren every quarter and every year. So even though the price is sort of flat, this is another dividend investment for Buffett. So it's interesting because Buffett says that he doesn't like dividends, or at least he doesn't like dividends if there are better opportunities to allocate the capital. In case of Chevron and Occidental Petroleum, dividends seems a smart choice, and Buffett is taking full advantage of that. Okay, let's move to another company, and that is the fourth biggest investment in the US portfolio for Warren Buffett, and this is Bank of America, one of the largest banking and financial service corporations in the United States. So this investment makes up 10.19% of the portfolio. It is valued at $26.3 billion. Last quarter, he received $164 million in dividends, and the value of this investment went down by $3.5 billion. And the reason for that is the falling price, but mainly the fact that he sold 7.2% of this investment. So we can see that he bought the first shares in Q3 2017 for around $25. He added to this on two different occasions in Q3 2018, and then when the price really fell down in Q3 2020 to $24, he added to it again and kept this amount of shares all the way till Q2 2024. And then when the price was close to $39, he started to sell, and he's selling every single quarter. So it's going to be interesting. Will Bank of America also be kicked out of this portfolio just as Citigroup, or is he just trimming it and gathering cash to invest in opportunities that should arise in the near future? Also, we get here huge dividends along the way. As we can see, they are going down because he owns less shares, but the biggest dividend was in Q2 2024. It was almost $250 million in one quarter. So a really substantial amount. Okay, and now we get to Coca Cola Company, the world's largest beverage company, bought around 37 years ago. And this company makes up 11.07% of his portfolio, is valued at $28.6 billion, and they received $204 million in dividends last quarter. Also, the value of this investment went up by $3.7 billion. Now, we don't have exact data here, but we know that he owned 400 million shares, and in Q1 2025, he owns 400 million shares. We can see that the price is going all the time up. Of course, there are some moments like in 2010 and in 2019, 2020, when COVID happened, when the price fell down, but he's not making any adjustments for that. He's just keeping the stock and believing that in the long term it will grow, it will become more valuable. And also, he is getting huge dividends. Like we said, last quarter, $204 million in dividends, but these dividends are growing all the time. Every year they are going up. So this is a great investment, not only because of the price, but also because of the dividends. And the second biggest investment in Warren Buffett's US portfolio is American Express, a multinational financial services corporation known for its charge cards, credit cards, and travelers' checks. So it makes up 15.77% of the portfolio. It is valued at $40.7 billion. They received $106 million in dividends last quarter, and the value of this investment went down substantially by $4.2 billion. They didn't sell any shares, but we can see that the price dropped quite dramatically from Q4 2024 to Q1 2025. 2025. So we don't have an exact data when he bought his first shares of American Express, but we know that he owned it in Q4 2006, and the amount of shares through those years didn't change at all. So it's the same story as with Coca Cola. He believes in a great company, he buys it at a fair price or a discount, and he just keeps it for decades. So we can see that even when the price was down, all the way down here in Q1 2009, and a bit earlier, so during the financial crisis that everybody was selling, and we can see the price just going down all the time. Even during that time, Buffett didn't sell. He just kept the shares, and they bounced back, and right now they are worth a lot more than they were when he actually bought them or when financial crisis happened. So that shows you that no matter what is happening, if he knows he owns a great company, he's just holding on to it, just letting the compounding do its work, letting the company work it through all the crisis, and just he does nothing. He's a master of doing nothing when it comes to great companies. And when we look at dividends, that's the story we also know, growing dividends through the years. And it seems that Buffett really likes companies with dividends, even if he doesn't say it aloud, maybe because Berkshire doesn't pay dividends, and it probably is a good thing because he knows he's able to allocate capital in better ways, but he likes to receive dividends, get this capital, get this money to invest in other opportunities. Okay, and the biggest position in the US Berkshire Hathaway portfolio is, of course, Apple. And it is a multinational technology company that designs, manufactures, and markets consumer electronics, software, and online services. Now, Apple makes up 25.76% of the portfolio. And not that long ago, it was over 50%. This investment is valued at $66.6 billion. They received $75 million in dividends, and the value last quarter went down by almost $8.5 billion. And last quarter, in Q1 2025, he didn't sell any shares, so it was only the price going down. So he bought his first shares in Q1 2016 for around $27. And he kept on adding to this position till around Q2 2018 when the price was at around $46. Then he just kept it. We can see that he's sometimes trimming this position so it wouldn't get too big. But in Q4 2023, he decided to trim this position substantially. Then again in Q1 2024, around 50% of it. And then again, he sold some shares. So basically the fact that Apple became such a huge company and such a huge part of this portfolio, because it was over 50% of the portfolio, I think Buffett decided to get some cash out. It was a great investment. It is still his biggest position. He still believes in Apple, but he decided to get his money back to invest in other opportunities. And we will see how it will pan out. That's the beauty of investing. Nobody knows. It is always exciting to watch and see who made what decisions, where are the mistakes, where are the opportunities. Okay, and also Apple pays dividends. We can see that at certain points the dividends were even over $200 million per quarter. Right now they are below 175 million every quarter. That's because he owns substantially less shares. So what can we learn from 20 years of watching Warren Buffett actually invest? Looking at this portfolio, three fundamental principles emerge that separate Buffett from everyone else. First, time is your greatest ally. While the market obsesses over quarterly earnings and daily price movements, Buffett builds for decades. He's held Coca Cola for 37 years, American Express through multiple crises, and has never sold a single share of some of his best performers. This isn't just patience. It's understanding that compounding works its magic when you own exceptional businesses for a very long time. Second, concentration beats diversification when you truly understand what you own. His top 5 holdings represent over 70% of the portfolio, because he'd rather own a few wonderful companies than dozens of mediocre ones. But notice how his circle of competence has evolved from buying cheap cigar-butt stocks early in his career to paying fair prices for quality businesses with economic moats. Even his Apple investment shows this evolution. He didn't suddenly understand technology. He recognized Apple as a consumer brand with incredible consumer loyalty. And third, contrarian thinking requires both courage and cash. Buffett keeps massive cash reserves, currently over $300 billion. Not because he is pessimistic, but because he is prepared. This isn't market timing. It's having a financial strength and emotional discipline to act when opportunities present themselves. The biggest lesson? Buffett's success isn't about picking the perfect stock or timing the market. It's about having a systemic approach to finding quality businesses, the conviction to concentrate on the best ideas, and the patience to let compound returns work their magic. If you can master these 3 principles, thinking long-term, concentrating on quality, and maintaining contrarian discipline, you are not just learning Buffett's strategy. You are building a framework for sustainable wealth creation that can work for the next 20 years and beyond. If you watch this entire video, thank you so much. You deserve a medal, and I hope you got some value from it. And remember that you can get access to the Smart Money Portfolios website by becoming a Patreon. Thanks again, and see you in the next one.